In this video we are going to talk about the best dividend stocks right now. So before starting, please like this video and subscribe to this channel for our future updates. The term dividend-paying corporation refers to a corporation that distributes a portion of its earnings to one or more classes of shareholders on a regular basis, or dividend-paying stocks. This type of organization is frequently well established, with stable profitability and a track record of returning a portion of its earnings to its shareholders, among other traits. It is also a good investment for investors. A dividend is a payout that a corporation makes to its shareholders, which can be in the form of cash or new shares of its stock, depending on the circumstances. On the other hand, in certain situations, dividends are paid out every month, every year, or even only once a year, such as in the case of a one-time special dividend, which is paid out only once in a year. When the economy is in a slump, dividend stocks are well known for their dependability in paying dividends. However, in difficult economic times, dividend payments may be reduced in order to conserve cash reserves. We'll take a look at the top 5 dividend stocks that are now available for buy in the table below. Number 5. Annaly Capital Management Inc., NLY. For the foreseeable future, the dividend yield is 10.13%, representing a return on investment of 10.13%. At this point, the payout ratio is at 40.6%. It will cost you $8.69 to purchase it. Investment return over a year, 34.6%. Market capitalization, $12.6 billion. Return on investment over a year, 34.6%. Market capitalization, $12.6 billion. Return on investment over a year, 34.6%. Market capitalization, $12.6 billion. In addition to investing in and lending money to the building of residential and commercial real estate, Annaly Capital Management also provides financial services to the real estate industry. Agency mortgage-backed securities, MBS, residential real estate, and middle market lending are just a few of the assets that it handles. The assets of the corporation are estimated to be worth approximately $94 billion in total, based on their entire value. On September 9th, the corporation's board of directors declared a common stock cash dividend of 22 cents per common share for the third quarter of 2021, which will be paid in cash to shareholders of record on September 9th. According to the dividend schedule, communal shareholders, who own their shares as of September 30, 2021 would receive a dividend payment of 1 cent per share on October 29, 2021, if they retain their shares as of September 30, 2021. Number 4. Egg Investment Corp., Inc. For the foreseeable future, the dividend yield will be 8.72% per annum. It was possible to obtain a total of 43.8% of all awards. The cost per person is $16.51 plus tax. The company's market capitalization currently stands at $87 billion. Over a one-year period, the return on investment is 28%. Over the course of a year, the return on investment is calculated. ANG Investment is a mortgage real estate investment trust, REIT, that is domestically managed and whose major concentration is on agency mortgage-backed securities. ANG Investment is a mortgage real estate investment trust, REIT, that is focused on agency mortgage-backed securities. ANG Investment is a leveraged investment firm that operates on a commission-based compensation structure, MBS. The corporation is able to fund its investments through collateralized borrowings, which are frequently in the form of purchase contracts, repos. According to ANG's announcement on October 7, 2018, a cash dividend of 12 cents per share of common stock was declared for the month of October 2021, which will be paid out in cash to shareholders who held their shares of common stock on October 7, 2018. Community investors who had their shares as of October 29, 2021, will get their dividend on November 9, 2021, if they still own their shares as of that date, according to the organization. Number 3. New Residential Investment Corp., NRZ. The average payout is 54.3% of all wagers, resulting in an annualized dividend yield of 8.64%, forward dividend yield. The average cost is $11.57 per month. The market capitalization currently stands at $5.4 billion. The return on investment was 58.1% after a one-year period of operation. A mortgage REIT, real estate investment trust, is a type of real estate investment trust, real estate investment trust. It accomplishes it in a cost-effective manner, while also providing funding and services to the mortgage and financial services businesses. According to the company's long-term cash flow strategy, it invests in assets that generate continuous cash flows over a prolonged period of time, such as real estate. Along with other assets and mortgage-related assets, the company's investment portfolio includes non-agency securities, residential loans, and other investments that are closely tied to mortgage servicing. 6. The acquisition of Genesis Capital LLC by New Residential, a business purpose lender that focuses on developers of new construction and associated projects, with a particular emphasis on new construction and associated projects, was announced earlier this month. At the time of the sale, no information was provided about the purchase price. Projections indicate that Genesis will originate around $2 billion in loans by the year 2021, based on current estimates. According to the news release, there was no information provided on the specifics of the sale, including the amount of money that was being sold. According to current projections, the purchase will be finalized in the fourth quarter of 2021 at the earliest. Number 2. TFS Financial Corp., TFSL. It is projected that the dividend yield will remain at 5.74% for the foreseeable future. It was possible to obtain 72.7% of the entire compensation. There is a fee of $19.69 per person. A total of $5.5 billion is now represented by the market capitalization. An annualized return of 27.3% was achieved over the course of 1 year. As required by its charter, this corporation must conduct the great bulk of its operations through fully owned subsidiaries. The corporation was founded as a federally authorized stock holding company in 1903. It also offers retail consumer banking services to the same customers in addition to mortgage lending, deposit gathering, and other types of financial services. In accordance with the corporation's financial papers, its total consolidated assets were valued at $14.6 billion as of September 30, 2020, according to the corporation. Number 1. Southern Copper Corp., SCO. The dividend yield is 5.59% for the foreseeable future. A total of 60.9% of the total compensation was collected. The total price is $64.38. The market capitalization is $49.8 billion. 31% in total return over a one-year period. In all facets of its operations, Southern Copper, a copper producer, places a heavy emphasis on integration, as seen by its name. Copper, molybdenum, zinc, lead, coal, and silver are just a few of the metals that the firm makes, but there are many more. Among other countries, it has mining, smelting, and refining activities in Peru and Mexico, according to the company's website, and it also conducts exploration efforts in Chile, among other places. 9. Even while the views, opinions, and analyses provided in this article are intended to be informative only, they should not be construed as individual investment advice or recommendations to purchase any securities or to implement any investment strategy, regardless of their intention. In this post, the information provided is solely for the purpose of informing and educating the reader. The accuracy and completeness of the information supplied below, however, cannot be guaranteed despite our assumption that it is reliable. We would like to warn our readers that the ideas and strategies discussed in our content may not be suitable for all investors, and that they should proceed with caution as a result. Due to the cyclical nature of the market and economy, we publish all comments, opinions, and analyses as of the date of publishing. However, we reserve the right to make modifications at any time, with or without prior notice, as necessary. No country, location, market, industry, investment, or strategy discussed is intended to constitute a comprehensive investigation of all relevant facts pertaining to any of the topics addressed. As a result, no comprehensive examination is offered. What do you think about our video? Please let us know in the comments area below. If you enjoyed this video and would want to hear from me again, please subscribe and turn on the notification before leaving. Thank you for watching us.